Canadian tax system. One of the key sources of money for the Canadian federal government, which is utilized to fund numerous social and economic projects, is taxes. The federal government and each provincial government are responsible for enacting new tax legislation, although the Canada Revenue Agency, CRA, is primarily responsible for tax collection, CRA. With the exception of Quebec, the Canadian federal government is responsible for collecting all personal income taxes, including those collected by the provinces and territories. In addition, the CRA collects corporate income taxes on behalf of all provinces and territories, excluding Alberta and Quebec. Revenue Quebec is responsible for collecting personal income taxes in Quebec on behalf of the provincial government. After the Canada Revenue Agency, CRA, has collected all federal, provincial, and territorial taxes, it delivers the provincial or territorial revenues corresponding to those taxes to the participating province or territory. The Act concerning income tax. Both the federal and provincial, or territorial, governments tax the individual's income. The Federal Income Tax Act oversees how income is taxed, and its provisions apply to both individuals and businesses. Whenever the federal government develops its annual budget, the Income Tax Act undergoes extensive adjustments. Due to these adjustments, the amount of tax you must pay from one year to the next may vary. In order to calculate the provincial tax, the legislation contained in the numerous provincial and territorial statutes are utilized. It is known as the combined tax rate when both the federal and provincial income tax rates are taken into account. Classifications for tax. In addition to the Income Tax Act, other laws govern the imposition of taxes on international trade operations such as the import and export of goods and services and the sale of real estate. Moreover, Canada has signed a number of international treaties with foreign countries. These treaties govern the taxation of individuals and organizations who conduct business or generate income on a global scale. Taxation by means of self-assessment. In Canada, taxpayers are responsible for their own self-assessment as part of the tax system. Every taxpayer is responsible for reporting their total income and calculating the amount of tax due on that income. The CRA performs numerous audits of businesses and individuals each year to verify compliance with tax regulations. If it is determined that a person made errors in computing or reporting the amount of tax owed, that person is subject to a reassessment, and if the error was intentional, a penalty may be levied. The Department of Justice may opt to prosecute a person for tax evasion or a criminal offence if it is proven that he or she has been deliberately evading the law.